All right, guys, good morning. Good morning. Welcome to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is Friday, December 10th, 2021. Before we begin, bottom right-hand corner of your screen, white logo, click on that, turn on notifications, subscribe to our channel, like our videos, and comment your questions. Really do appreciate it. Your likes help the algorithm for this video. So again, I really do appreciate if you just press that like button and subscribe to this channel. Let's talk about the markets here. Dow futures up 187 points. The Nasdaq's up 0.85%. S&P 0.74% on the futures side. Russell 2000 futures are up 0.94%. Crude oil is up 1.30%. 10-year yields are down 5 basis points. Dollar index is down 0.07%. The VIX is below 20, 1951, good sign. Gold futures are up 0.62%, 1787. Futures 2217 up 0.74%. Ethereum futures are up 2.28%. Bitcoin futures up 4.66%. Gasoline futures up 0.73. Euro dollar is down 1 pip, 112.94. Dollar yen is flat, 113.45. Okay, so the big news today was the CPI, which is the Consumer Price Index. So here was the CPI. Let me get the numbers for you. I had it here. Okay, here's the CPI numbers. Core CPI year over year was 4.9%, right near 5%. That's the highest since 1982. That's a 39-year high, year over year. So actual month over month was 0.8%. 0.08% versus 0.7% year over month over month. So that was higher than expectations, but the year over year was expected at 6.8%. CPI, which in the core, excluding food or energy, is 0.5% to 0.5% estimates, and 4.9% versus 4.9% year over year. So that's why the markets are up for the most part. So really what I've noticed is that everyone yesterday was pretty bearish ahead of that CPI print. So again, you had a lot of people, again, you saw the NASDAQ. We talked about it yesterday on the aftermarket recap. A lot of the risk-on assets were sold. Again, thinking of Armageddon, today's CPI, like, oh, how high is the number going to be? Well, if you really think about it, yes, the CPI number is the highest since 1982, sure, but the markets are not really reflecting Armageddon either. So again, price dictates all. You can't fake price action. This is where we are. So what I think happened yesterday, for the most part, is that a lot of retail traders or a lot of funds, possibly, they pretty much joined in on the short side, and they said, hey, we are probably going to have Armageddon tomorrow, the worst CPI ever. We'll probably retest 4,600 or something. And those people are offsides today, and now they're getting squeezed. So I would expect us to go a little higher today, pretty much make up for all the losses yesterday, and then some. Because, yes, this number, again, the flash headline number, highest since 1982, sure. But again, it's not as bad as people say in terms of the expectation. I think the expectation was far worse than what the reality is. Is this number good? No, of course not. Highest CPI since 1982, of course. But again, is it the absolute worst thing? Are we Zimbabwe? Are we Venezuela? The highest inflation? No, not there. But again, high inflation, sure. As we know, we just came out of a pandemic economy where everything was shut down, supply chain issues. Again, I still believe things are being worked on, and things will normalize, just like I thought in 2020 with March and COVID. And I said things will improve. I still believe things will improve anyways. It's very hard to bet against the American economy because we always bounce back. So the CPI for all items rises 0.8%. In November, gas, food, shelter, and vehicle indexes all rise. So that's where we are today. This is from Bank of America, an actual note. Let's see. The actual note from Bank of America was, we expect the Fed to double the pace of QE tapering, raise its inflation forecast, and signal 2 rate hikes next year at its upcoming meeting. That's what their expectation is. So I think we already kind of expected that we're going to get a rate hike next year. I think the consensus is December, which is fine, but there's not going to be more rate hikes or any rate hikes by the end of this year. So at least we have no more CPI data, no more of that data coming up to the end of the year till next year. So now it's 2022. We'll see what happens. But again, I still like this price action. I like that, the fact that we got the real number, not what we think is going to happen. We got the real one. And now the markets are basically showing you that, hey, it isn't that terrible. The 10-year Treasury yield, just to get a little context, the 10-year Treasury yield last time inflation was this high, 1982, was 13.8%. That was the interest rates. That was a 10-year yield. So at that point, you're talking about a 15% mortgage. The 10-year Treasury today is 1.5%. Just a little context of where we are from then, about 40 years ago. Hell, I was born 3 years after that. So good morning, good morning. Hey, Preston, he's been subscribed for 10 months. Hey, thank you so much for being a part of the group. Really do appreciate it. Let's take a look at some pre-market movers together, and then we'll answer some questions. Let's go and move this. Anything that stands out in terms of most active, Lucid Group up 4%, Moderna down 11%, C3 AI is up 13%. On the Dow, Apple's up 0.5%, Microsoft up 0.72%, Boeing is up, Verizon, Walt Disney, all green. On the S&P side, AMD, again, I told you guys AMD, I bought the dip. I also have calls on AMD. Now we're up nearly 2%. NVIDIA up 2%. Southwest down 3.42%. Pfizer down 1.29%. Ford Motor Company up 1.28%. On the NASDAQ, let's see, Peloton was downgraded, I believe, today by Morgan Stanley. They're down 3.37% this morning. Micron was also down 0.68%. Meta Platforms, Facebook, up 0.95%. Tesla's up 0.72%. And as we go further into the NASDAQ, none of these do I really know. I mean, Tesla and Moderna, sure. But other than that, pretty much a green morning so far, even with that CPI data. I'm still getting the news as we go, but the news has been coming in. So you could see analyst shipping costs, another danger for inflation, watchers to navigate. That was from Reuters. So you can see, 5-year break-evens are falling. So again, not the worst thing in the world. I guess everyone was expecting Armageddon. It didn't happen. Markets are green. All right, good morning. Thoughts on BABA for calls? Let's take a look at it. Alibaba for calls. Alibaba really needs to start breaking out right above 130. If 130 does break, then I do like calls. But until then, I would wait for that. I would also, you can see here, the 200-day moving average. If you break 127, you could look for 130 calls. But I think the 130 break first is a little more prudent to wait for. Thoughts on holds of 80% air and cruise line. It depends on the, that's a really hefty bet on that, that COVID restrictions are going to go away. I don't think I'm ready to make that bet. I only have one airline, which is Delta. Personally, the stock. I'm not a huge fan of cruise lines to begin with. I've never really been a fan of cruise lines, even before COVID. But airlines I do like. I think American's fine. I think Southwest is fine. I think Delta's fine. But cruise lines, again, higher risk on there because you're still going to have flights regardless. But cruise lines aren't exactly a business thing where people have to go on cruises. So that's a little higher risk and higher reward. But I think, I hate the word safer bet, but the more consistent look would be airlines, in my opinion. Does PINS have any bullish prospects at the end of the year? I think the only bullish prospect for PINS is if they get bought out. But until then, I'd have to take a look at their numbers. Their number hasn't been great. So any kind of bullish catalyst, I don't see it. I don't own the stock. There is an upside gap at 71.64. If you were looking to buy some to see if you can get that swing, there's a downside gap to 25. So I think if you wait for 25 for a little more of a dip on this name, you could possibly get it really cheap. But I'm not interested in Pinterest at all. Thoughts on Apple calls? Well, Apple is boosting today. Let's go ahead and take a look at the hourly. If you do break the highs, 176.75, that's pretty much the only thing you can do if you're looking for calls. Right here, I wouldn't do anything. You're welcome, Preston. So again, I do have AMD if you guys wanted to see exactly how I did it. Basically looked at this support. We broke that downside gap. I talked about this in the aftermarket recap. And then we're looking at this as support, 137.90. And then I expected us to bounce off that support. And after that gap being filled, just bounce back at least to the 100-day moving average. And I do expect we'll get that today. We should hit about 141, if not 142 today, and catch that trade. And trust me, it was a tough one because we just got an L on call. So it was very difficult. But again, it was a pure technical play. Do you believe in the Santa rally will continue? Yes, I do. I do believe the Santa rally will continue. I believe that we'll get to 4,800 on the S&P. That's around, we're at 46.93. S&P fair value is probably right around 46.99, about 6 points higher. Again, well, all we need is 100 handles, and I think we can get that, especially with a nice rally. Again, the CPI number is done. Like, we got that out of the way, and that would have been like the worst case scenario if it was really, really high. Again, not saying anything, 1982 highest year over year, sure, but in 1982, we had 5 years of still strong bull market, and then 87 crash. So if we go by that analog, we still have 5 years of an economic boom or 5 years of a bull market. So just kind of, kind of look at the positives here. Some good things there. All right, so not a lot of questions this morning. It is a Friday. Hope everyone's having a good morning. I'm going to eat some breakfast, that's for sure, and have some coffee. So I'll leave it there. I'm going to catch you guys for the aftermarket recap, and we'll leave it at that. Have a great rest of your day, and happy trading to everybody. We'll see you guys soon.